Hey everyone, how's it going? It's your favorite gentleman, Marcus Norman of Gentleman Style Podcast Show. And we are going live and we are going to talk about something that is unique, not just to you, not just to me, but it's something that's growing and it's a new trend that we are all getting on the bandwagon for. And we need to really involve ourselves and get in the groove for this because this is going to be a part of our future. We are going to talk about something very exciting, and I think I need to know is alternative investments and how that is worked up and how people are now transitioning from the traditional investment assets now over to this new investment asset class of alternative investments. You won't want to miss 1 second of this jam-packed guest, and I have the perfect gentleman to talk about it with us today. Won't want to miss a second. Here we go. Hey everybody, welcome back to the Gentleman Style Podcast Show. And today I'm bringing to the stage Mr. Chris Odegard. Mr. Chris is just, you're looking at him, you would assume he's just your average guy who had a white collar job in a corporate America world and followed the only thing he knew for decades that you and I probably are doing now, right? And in our conventional wisdom and in that conventional investment industry, we did a huge transition and we followed along in our parents' footsteps, which is investing in the traditional market. His work is huge and it's very vast and it's very insurmountable and it's necessary because he's going to be talking about things that we need to now be looking at and considering, maybe in addition to or as an alternative replacement altogether on where we put our money and how we invest. His strategy worked relatively well until 2009 when he was a traditional investor like you and me, right? And in 2009, he crossed over and he realized he experienced a liquidity event in his job, in his employer, where he lost 55% of his assets and thousands of dollars per month in cash flow. And now he's here to help us do better with our money. Help me welcome to the stage the incredible Mr. Chris Odegard.
Hey, Marcus.
Hey, welcome, sir. Glad to have you. I appreciate you taking your time out of your busy day to be with us on the Gentleman Style Podcast Show.
That's like the best introduction I've ever seen, man. That was awesome.
I'm glad you did it, sir. You did all the legwork. I appreciate you. So it's huge that I can get guests on a show like yourself who can talk about just different things that we all need to do better financially, in life in general. And so when I get guests like you all deserve it. So thank you for being here with us today.
My pleasure. Thanks for having me.
Absolutely. Can you share some background knowledge? You experienced that at Liquidity event. What happened exactly? Was it because you were right after the real estate crash in 2008. So is that what caused everything to liquidate? Can you tell us a little bit more about that?
Yeah, no, my illiquidity event where I lost 55% of my assets, like you said, in 2009, was in addition to what was going on in the marketplace. In my case, it was caused by a divorce. And so that's where all of my assets went, as well as thousands of dollars a month in cash flow. And of course, everybody, not everybody, people have these events in their life, and it could be caused by anything. Mine just happened to be that. But everybody can relate to, having some financial difficulties. But this was a big one. So think about, being on what I call the 401k highway to mediocrity, which was going to get me to retirement someplace out in the future so far where I needed a telescope to see it. So it was working about as well as that works for anybody. But then you take away 55% of everything, and then your mid 40s, then it starts to look really bad. And, you have a handful of options. You can work longer. You can reduce the type of lifestyle and fun you want to have in retirement, or you can change the way you invest and try to claw your way out of that. And that's what I did.
And you did. You did that very well. And I more and more I listen to other podcasts. It's funny, right? I have a podcast, but I also listen to other
Sure.
podcasters, and they always talk about these events that they've experienced. And that's what you don't want to find out, right? You don't want to come to the realization in the later years of your life that your money, half, more than half of your money, your retirement that you set aside and you worked hard for, is now gone due to whatever, a changing economy, a changing world. And
Yeah.
so what is an alternative investment, and how is it different from traditional?
So the easiest way to talk about it is to talk about what conventional investments are. So pretty much everything that's publicly traded, stocks, bonds, mutual funds, ETF, those are conventional investments. Everything that's not publicly traded is an alternative. That would be every type of real estate, everything from single family to, apartment buildings and shopping malls, all the precious metals, and businesses, but private shares of smaller businesses, so not publicly traded. That's an alternative investment. So, the conventional investment world is like this big, and the alternative investments are all the rest of it. And so, yeah, it's a huge thing. And there's really four asset classes. So the four asset classes are paper, that's your stocks, bonds, and mutual funds; real assets, like things like real estate, business equipment; commodities, grains, beef, precious metals; and then the private shares of small businesses. So when you go to your typical financial planner, and you usually pay that person money in one form or another, and they say they're going to build you a balanced portfolio, they're building you a balanced portfolio in one of the four asset classes: paper. You got no real estate, you got no commodities, and you got no private shares of small businesses. So, at the end of the day, you're not diversified at all. You're in this tiny segment.
True. And that makes sense. Is our baseball cards. I recently did an episode on comic books and alternative investments in those types of spaces. What kind does that fall in any of the categories of, like, expensive watches,
Yep.
expensive artwork and art
Yep.
pieces? Are those alternative
That,
investments as well?
yeah, they are alternatives. And with the technology as it has changed, and some of this is with the blockchain, you can now go out and buy a fractional ownership in, like, a multi-million dollar piece of artwork or a multi-million dollar collector car. And so some of the technology is opening up these parts of alternatives that have never been open to just regular people before.
That makes sense. This isn't something new, right? This isn't something new, even though it sounds very new to some of us. Who typically invests in alternative investments?
Uh, well, rich people do. But the thing is, you don't need to be rich to do it. You just need more financial education. So smart and savvy investors invest in alternatives. And most of the time, rich people don't get rich by being stupid. They get better advice and they get better education, and they know. And when you said, "Is it new?" Well, dirt has been around for a long time. And so dirt, raw land, is real estate, and then you put a building on it, and now you've improved that real estate. So it is not new for sure, but for some reason, everything that is thrown at us through the media is all about stocks, bonds, and mutual funds. I was watching TV the other day with the Dow Jones went down, yes, and there's just 24/7 news coverage of every little movement in the stock market. And guess, you know what? I don't play in that market anymore. And my portfolio of apartment buildings and ATM machines and self storage, they just keep giving me cash and putting it in my bank account every month, and I don't have to sell a piece of it to generate cash flow. It generates cash flow. And is the value going up and down? Frankly, I don't know, and I don't care, because the only time the value of those assets make any difference is when I'm buying them or when I'm selling them. And they're producing cash flow through good and bad markets. So, I'm happy all the time.
I love that. I love that. And so I was about to ask, that was my next question. How do people make money with alternative investments? Is it a buy and hold strategy where I need to hold on to this piece of investment for a long time? Or, like you said, there are alternatives that can produce cash for you today.
Right.
Can you break that down for us?
Yeah, so it's both. Cryptocurrency is an alternative investment, and so that's a really that for the most part is a pretty speculative thing. So in my mind, it's not really investing; you're speculating, and maybe you're day trading, and that's a job. So as soon as you stop day trading, buying and selling, you're not making any money anymore. So that's not really investing. That's just another form of a job. But the alternatives. Let me back up to the conventional wisdom of building this giant basket of stocks, bonds, and mutual funds. It's basically a balance sheet item that has a certain value, but for the most part, it doesn't generate any cash. So you have to cannibalize or sell off pieces of that asset on a regular basis to generate the cash to live on. Now, if I own a handful of apartment buildings or even fractional shares, I don't own anything by myself. I own them with other people. So if I own, I have ownership share in apartment buildings and self-storage, those asset values are typically going up, and at the same time they're generating and giving me cash flow. So I don't have to sell them in order to get cash. I just pull off the cash if I want to, and it's going up in value at the same time. So that's the beauty of alternatives.
That makes sense. Thank you. Told y'all, Mr. Chris, we have one quick short commercial break. Don't go anywhere. Stay tuned. Stay with us. We'll be right back.
If you're looking for a reliable professional trucking and logistics service, you've come to the right place. Musa Trucking is a veteran-owned and operated premier transportation provider that can help with all of your trucking and logistics needs. Musa is revolutionizing the trucking industry through strategic partnerships, the development of core personnel, and the use of cutting-edge technology. Our inventory system ensures that cargo ends up divided into the right trucks and reaching the correct destination. Our drivers are dedicated to transporting goods efficiently and safely. Contact us today to get started by visiting the website on the screen or by calling 757-756-5246.
Love it. Welcome back to the Gentleman Style Podcast Show. And today we have Mr. Chris Odegard, and he is breaking down the new, well, not new, but something that's new to you and I, alternative investments, and how he is helping other people break into this world through his podcast, through his show, through his teaching, through his works, and what he experiences personally, first-hand knowledge with alternative investments and this asset. And the three, did you say three? Three asset classes.
Four.
Yeah.
Paper, small businesses, commodities, and real assets. Four. And so those are four. And then there's two bigger categories. There's alternatives and conventionals, and then you got these four asset classes.
Absolutely. So thank you for helping me with that. I don't know what happened there. So you also talked about early on the show that we are been trained on this conventional investing of stocks, bonds, and mutual funds, and that's it, right? We're not getting the hard assets. We're not getting the commodities. We're not investing in those areas. This is no longer working. The days of the stock, bond, mutual investing world, in my opinion, seems to be over. Why doesn't it work anymore? And why is everyone still doing it?
Well, the reason they're still doing it is because it's around us everywhere. You come out of the room, depending on the family you grew up in and the people you're around, that may be the only thing you've ever seen. And most people, and this is the part that's starting to change, get their news from mass media. Now that they're starting to tune into people like you, they're going to get a different story. But it's just, we just kind of come out of the womb and that's what we learn. And unless you step out of the mainstream media like we are here, then you might not hear it. And why it's not working, I don't think it's ever worked. So in the conventional investment world, lots of people say, well, how big does my portfolio need to be to retire? And that's really the wrong question. The right question is, well, how much annual income do I want to have in retirement or financial freedom at whatever age you want to do that? And that should be the question. So let's just pick a number. I'm grabbing my notes here so I can get these numbers right. So let's just pick a number of $100,000. Let's say we want to have $100,000 of income in retirement. That works in some parts of the country better than others. But there's something called the 4% rule. And the 4% rule is the kind of the general rule that financial planners give to retirees and say that's how much of your portfolio you can sell off every year and not run out of money before you run out of life. So if you do this equation, you say, well, I want to have $100,000 in retirement, and I use the 4% rule. So I divide 100,000 by 4%. I come up with a $2.5 million 401k portfolio. So that's a pretty big number. So if you're planning on retiring solely from your 401k and you're going to have $100,000 a year, that's how big your portfolio needs to be. Now, let's say, okay, maybe we set our sights a little bit too high. The median income in the U.S. is around $63,000 a year. So if we again apply the 4% rule to $63,000, we still come up with a $1.575 million portfolio. And but what's happening is just because there's no good interest rates, you can't get any fixed income returns anymore. I mean, savings account is zero, bonds are paying very little. The 4% isn't working anymore. It's now becoming like the 3% rule or the 3 point whatever rule. So if we take that $63,000 median income and divide it by the now 3% rule, you're back up to a $2.1 million portfolio. And so I make this statement that this system doesn't work for 92% of the population, because the truth is 92% of the population will never be millionaires in their lifetime. There's only 8% of the people that ever get there. So this system that we all subscribe to doesn't work for 92% of us. So it's broke. It's broke bad. So
yeah, that's really broken. What can we do to change that trajectory? What can we do? What can we start doing? That young man, that young woman out in the audience, what can they start doing today to start getting things back on track with that retirement?
Well, I think you have to switch over to alternatives, because I can retire with $100,000 a year with alternatives, and I don't need $2.5 million because I don't have to sell off a portion of this portfolio. So they need to start looking at other stuff. Oh, and you said, why isn't this working? I asked a friend of mine who's in the conventional financial planning world, and I said, how come you guys don't advise people on alternatives? And he had two reasons. He said, number one, if I recommend a stock, bond, or mutual fund to Marcus and it loses money, you can never sue me as an advisor. These are publicly traded, SEC approved things. You can't sue the advisor. But if I say, hey, Marcus, I've got this great deal where you can have partial ownership in an apartment building that's going to generate an average of 20% annually. Now, if you lose money on that, and I advised you of that as an alternative as a financial planner, I can be liable. And then the other thing is, he said, the conventional investments are easy, repeatable money for the advisors. So that's why they like it.
So they stay away from that responsibility of possibly getting sued because there's protection and safeguards in there.
Yeah. And it's frankly more work, and they just take the path of least. Where's the easiest money? Right. So that's where it is.
Makes sense. Makes sense. How does cryptocurrency and NFTs fall into this space? Should people, because I get nervous when people say, people are transitioning completely into crypto, and then cryptocurrency, like I can't find them anymore. It's not doing so hot right now. Right. Diversification. That's what you said earlier. How do NFTs and crypto fall into the alternative investment space?
Well, I mean, they are alternatives. Well, I think it's still a little bit of it might be a little bit of debate about which asset class do they fit in, or are they in their own asset class. But I consider them an alternative investment. And but they're for the most part, that stuff is all so new. It's very risky and very volatile. So if you're an investor and you're trying to build long-term wealth, you don't want to put your whole portfolio in something that could lose 50% of its value tomorrow. Now it could also go up 50%. That's what we call asymmetric risk returns. A small investment could make a ton of money, or it could also lose a ton of money. So I think everybody should be taking a little bit of their money and what I call swinging for the fences, swinging for the grand slam. Probably it's something less than 10%. But I'm a huge believer in the long-term viability of Bitcoin, and I buy Bitcoin every week. I have a set dollar amount, and I have a purchase set in that happens every Monday. It happened today, and I'll either be right or I'll be wrong. But if I lose all of it, it's not gonna, it's not gonna damage me because it's a small port. But if I'm right, it could be life-changing.
Makes sense. There you have it. I wanted to ask the question, how do you evaluate an alternative investment? How do you figure out whether an investment is a good investment or a bad investment for your portfolio? How do you look at it?
So I guess I'm a little bit lazy, and I've been a little bit lucky. And so kind of the lucky thing has here's the most important thing. There's all kinds of analysis, and there's all kinds of spreadsheets and all kinds of numbers. But here's the thing. You need to find other people that like, trust, and respect that have had a positive experience with that deal, with whoever's putting that deal together. So, if somebody comes up to me and says, "Hey, I've got this," yeah, right. I've got this thing that you can invest in, and I don't know you. I've never heard of you. You're not even getting in the front door. Unfortunately, it's got to come from. And I belong to a couple of different kind of investing masterminds that I pay to belong to, and we have, weekly or bi-weekly Zoom calls, and we talk about this stuff. And so I'm always learning from other people's what they're doing, what's worked, what's not worked, and we say, okay. And then it's up to me, to look at all these people and what they're doing and make a decision. But these are people who have already been down that road with some particular syndicator or deal organizer.
So that makes sense. So one, get with other people who are already doing something that you're interested in, connect.
Yeah.
Right. And also have a relationship. That's what I heard. Have a relationship with them prior.
Yeah. Yes.
Don't just, because everybody will be on your inbox saying, "Hey, I got the new best Bitcoin or Dogecoin.
Yeah.
You should invest with me."
Right. Yeah.
And that's not the way to do it.
Yeah. So there's a one of the it's actually contrary to what I've said before. So all investments have risk. Conventional investments have level of risk, and alternatives have a level of risk. But the conventional investments have gone through this SEC scrutinizing process to get listed on a public stock exchange. And the alternatives have not. In a lot of cases, they're unregulated. So it would be easier for you to be taken advantage of by, an unscrupulous operator in the alternative space. And that's why you have to have better financial education. If you in today's world, if you join a company and they have a 401k, they will automatically opt you into the 401k, pick the amount of your paycheck that goes in and the investments that it go into. You can't do that in alternatives. You have to be smarter.
Yeah, you have to be smarter and you have to be involved.
Yeah.
So true. So true. We're going to go to one more quick commercial break, y'all. Don't go anywhere. Stay tuned. Stay with us. We'll be right back. Good day, podcast listeners. This is your boy, Marcus Norman of Gentleman Style Podcast Show. I wanted to let you guys know that we will be rolling out a new feature and adding a join sponsor button next to the subscriber button here at the bottom of your screen. Once you click the button, it will display 3 membership levels. Gentleman Gentry, which is our entry level, Duke Duchess, which is our season level, and the Emperor and Empress, which is our most sophisticated level, which you will receive unique perks and benefits at each differing level and gain access to our community tab. We will also be sharing polls, upcoming events, and interviews, as well as receive feedback from our sponsors directly. Your support helps me find new and exciting guests to bring to the stage live. Well, in order to get the higher end speakers, it requires, some, you guessed it, money. So thank you for tuning in to my channel. And if becoming a sponsor sounds good to you, then select the join button below and choose your desired sponsor level. Let's continue to grow and serve the future of generations of men and women to come. Love you guys. Bye.
Are you a local business looking to offer your customers easy access to cash without having to travel miles? We're here to help. At Norman Legacy Investments, we provide free ATMs with free installation that provide a suitable investment for your business. Even better, we offer you some profit sharing and handle everything from start to finish. Just reach out to us today to schedule a free consultation.
We are back to the Gentleman Style Podcast Show. If you are just tuning in, we have the man, the myth, the legend, Chris Odegard. And we are talking about alternative investments that also is now including NFTs and cryptocurrency in that space as well. If you're just tuning in, if you missed any of that, go back, scroll back, and check him out. He is huge. He also broke down one of the key concepts that we should expect and we should do and incorporate in our lives when working with alternative investments. Because just like what he mentioned earlier, unlike your broker or stock trader or Wall Street investor, right, who has that fiduciary responsibility, he's protected because he's doing traditional investments between stocks and bonds. Alternative investments, all investments have risk. And so you should get with someone that you know and trust in the space. Did I miss anything, Mr. Chris?
No, you got it. But can I go? There were two of your ads that I think are relevant to this conversation.
Absolutely.
So yours and your membership level. So, like we were talking, how do I know what to invest in? Well, I belong to groups that have a membership level that are focused specifically on building wealth. So that's one of the main places where I pick out, what I'm going to invest in, what I'm going to not invest in. And oddly enough, one of my alternative investments is ATM machines. And one of your ads there was about ATM machines. Well, I'm the guy who owns the ATM machine. So in the ATM world, you have the person that owns the real estate that the ATM sits on. And then you have the person that owns the ATM, and you have the people in the companies that service them. And all of those three parties get a piece of those transaction fees that you pay when you use an ATM. So I'm on the owner side of those.
Love it. I love it. Love it. And you're right. That's an alternative investment, right? Mm-hmm. It's not your typical stocks, bonds, mutual funds, or commodities. Not. It's a hard, tangible asset. You can go it, smell it, touch it, if you want to. If you don't want to. You have a book. You wrote a book.
I did.
On investing, alternative investments. Can you talk about it and what readers can expect when they purchase their copy?
Yeah. So this is the book. It's called Get Off Your Ass and Manage Your Money, Why You Need Alternative Investments. Some people like the title, some people don't. But it's, the book title is supposed to do two things: get your attention and tell you what the book's about. So hopefully I accomplished that. But the book came out in November, and basically it's me looking at, my path from going from conventional investments to alternatives was very crooked, backward, forward, sideways. And what I tried to do in this book is say, if I could share my knowledge with everybody else, I could draw a more efficient and just a path with a lot less mistakes. So you're going to learn about the 4 asset classes. You're going to learn about something I created called the hierarchy of investors, which really explains alternatives, and it compares alternatives and conventional investments across 13 different categories, and alternatives win in 11 of the 13 categories. So why, would anybody invest in conventionals when they're just so inferior to alternatives? So that's what you'll learn in the book, and it's just a little over 100 pages. It's got colored graphs. It's a 2-hour read, and that'll mostly get your mind in the right place to start moving in that direction.
Where can my audience get a copy?
You can go to my website at theprolificinvestor.net. There's a flashing green star on there, which will take you to the link, which will take you to Amazon. If you go directly to Amazon and type in the title, it might be a while. So if you just type in my name, Chris Odegard, the book comes up really quick. So either place.
Absolutely. Mr. Chris, you are phenomenal, and this has been impactful. What advice would you give to that young boy or that young girl? Because as we know, the ATM business as an alternative investment can be expensive to get into in the front. But once you get in, it pays huge returns on the back end. But alternatives in general, as a whole, what advice would you give to that young man, that young girl in the audience who wants to get started today?
Yeah.
Any tips?
Yeah, well, you have to get educated. In my book, and I'm sure there are some other books, is a good place to get started. You've got to start getting outside the media and listening to podcasts, yours and like other people's. Otherwise, you're not gonna hear about this stuff. And if I could go back in time and go back into my early to mid 20s with the knowledge that I have now, I would have never put a dime in a pre-tax 401k. So, and I know that everybody says, "Oh, well, but what about the match? And what about the tax benefits?" The truth is that you have those same elements, something like a match and tax benefits with a single family rental, but they're better. So think about when you make an investment in a 401k, your employer gives you a one-time matching contribution, right? When I make an investment, or if I buy a single family rental, I get the company match. I get a contribution from somebody else, but I get it for the next 30 years. It's called somebody else paying off the loan on that house. So the match is way better. And then this tax deferral thing, when you make that contribution, that one time, you get this one-time deferral of that taxes. When I buy the single family rental, I get a tax benefit for the next 26 and a half years. It's called depreciation. And on my website, there is an article about what's a better investment, a 401k or a single family rental. And the single family rental is better. Now, so if you're a young person, you're starting off, don't put your money into that 401k unless you can get it out really quickly. Start setting aside your money to get involved in some type of alternative investment. I just use a single family rental because everybody kind of understands that. And there are some places in the country where you can buy a house for under $100,000. So you start getting around $20,000 with you or somebody else, and you could start your portfolio of real estate.
It's true. That's so true, and that's huge, right? Because I have been talking to people on not heavily, but just mentioning to them, like, listen, your money is best served in your hands, right? Mm-hmm. With the education, with the financial education. Yes. Don't just empty your 401k and don't know and just have it sitting in your checking account. That's not what we're talking about. But with education, the best bet, the best investment will always, in my personal opinion, you may agree or disagree, is always going to be yourself.
Mm-hmm. Yes, absolutely. When somebody says, "What's the best investment?" You're sorry, you stole my. I have said this before. So, what's the best investment you can make? It's in your financial education. It's in your own education. It's always the best investment you can make. However, we're in this kind of world where you go to high school, maybe you do some level of college, and then after you get out, a lot of people just stop their education. And if people would look at me sideways if I told them the tens of thousands of dollars that I have spent on seminars and classes and meetings, right? But if I told them I spent that same amount of money getting a master's, they wouldn't think anything of it. But I would have never learned what I learned getting my master's degree. I worked alongside a ton of master's guys. Those guys are still working, right? They're still working for the man. Right? So, so it's alternative education as well. That's where you're going to learn this stuff.
Love it. Love it. Love it. How can my audience connect with you? How can we learn more?
Yeah, the best way is to go to my website, theprolificinvestor.net, which there's a few little hiccups going on there right now, but we'll get those sorted out. And everything that's about me and how to get in touch with me, all the social media links are there, YouTube, Instagram, Facebook. There's a couple of ways you can interact. There's a conventional wisdom quiz. So there's a 10-question quiz, and you can take these 10 questions. It'll tell you your answer, and it'll tell you my answer. My answer is the right answer. There's also a coffee cup in the middle of the page. I set aside Thursday, so if you want to have a free virtual coffee with me for 30 minutes on a Zoom call, talk about personal finance investments, we can do that. Of course, there's the book, and then I'm up to, 43 or 4 monthly consecutive blog articles on just every topic in the sun. And the interesting thing about these articles is that these are things I've done and experienced myself. So I didn't read these in a book and now regurgitate them to you. This is the good and the bad and the ugly, mostly good about my investing journey. And I don't think we said this, that, the reason I'm doing this is because when I had that illiquidity event in 2009 and lost 55% of everything, 9 short years later, I made it back, multiplied it many times over, fired the man, and I never have to work again if I don't want to. So 9 years, it is 5.6 times increase in my net worth in 9 years because of alternative investments and because I worked hard at my job and I made more money. So all of us, you say, what can you do? Maximize your income, because the only money we have to make is the money that exceeds our expenses. So if you're making $70,000 a year and your expenses are $70,000 a year, you got no extra. So keep educating yourself, getting the raises, getting the promotions, so you got more money to invest. Put that money in alternative investments, and then sooner than later you can fire the man. Do whatever the heck you want.
I love that. Fire the man.
There's actually a podcast called Fire the Man, so I stole it from those guys. It's a good podcast about how to make money with an Amazon, selling things on Amazon. So
we will be able to cut that out so we don't get, sued.
Sorry about that. I wasn't trying to advertise. I was just giving credit. Anyway, never mind.
You're good. Thank you for being on the show today, Mr. Chris. This has been impactful and helpful, and I hope this helps you, my audience. Thank you all for tuning in to the Gentleman Style Podcast Show. I hope this helps. I hope this helps take your investing to the next level. And Mr. Chris, I want to say this to you publicly. Thank you for being on the show today. We appreciate you. We love you. Thank you for taking time out of your busy day to be on the show today and taking time to just educate us on something that we truly need to know. And so,
my pleasure. Thanks for having me on, Marcus. It was a lot of fun.
This was fun. My pleasure. Like I always end every show, y'all, we got to give Mr. Chris back. He has to make investments and huge deals to close, but connect with him. We're going to put his website back on the show. Connect with him and learn more. Subscribe and check him out. This is huge. Like I always end every show, take care of your friends and take care of your family. And always, take care of business. This is Marcus Norman of Gentleman Style Podcast Show, your favorite host, and Mr. Chris Odegard, the prolific investor. Love you guys. Bye.
Bye.